Decoding Financial Terms. What is the prime rate? Hello, dear viewers. In today's video, we're going to unravel the mystery behind a very important financial term that you might have heard: the prime rate. Whether you're taking out a loan, using a credit card, or just curious about financial news, understanding the prime rate is crucial. Let's dive in and make sense of this key economic indicator together. Before we delve into the complexities, let's define what the prime rate actually is. The prime rate, in simple terms, is the interest rate that banks charge their most creditworthy customers. Typically, this rate is slightly higher than the interest rate that banks themselves are charged to borrow money, which is known as the federal funds rate in the United States. The prime rate affects the interest rates on various types of loans, including mortgages, personal loans, and credit cards. It serves as a benchmark that guides banks in setting their own interest rates. You might be wondering who sets this all-important rate. Well, the prime rate isn't decided by a government entity but is actually set by each individual bank. However, banks usually follow the lead of the country's largest banks, and it often moves up or down in tandem with changes made by the central bank to the federal funds rate. When the central bank wants to stimulate the economy, it may lower the federal funds rate, and consequently, the prime rate typically falls. Conversely, if the goal is to cool down an overheating economy, the central bank may raise the federal funds rate, causing the prime rate to go up. The prime rate can seem distant from our daily lives, but it has a very real impact. If the prime rate goes up, borrowing money becomes more expensive. This can lead to people spending less, which affects businesses and the economy at large. On the flip side, if the prime rate goes down, loans become cheaper, which can encourage spending and boost the economy. For individuals, changes in the prime rate can affect mortgage payments, credit card interest rates, and loan terms. So, it's always good to keep an eye on it, especially if you're planning to borrow money or refinance existing loans. That's all for today's lesson on the prime rate. I hope you now have a better understanding of what it is, how it's determined, and the significant role it plays in the financial world and our personal finances. Don't forget, a wise borrower always keeps an eye on the prime rate. Until our next video, keep learning and stay financially savvy. Goodbye and take care.